The Relative Strength Index, or RSI, is a popular tool. Traders use it for momentum analysis. It helps identify overbought and oversold conditions. Developed by J. Wells Wilder Jr., the RSI oscillates between 0 and 100. A reading above 70 typically signals overbought conditions. Conversely, a reading below 30 suggests oversold conditions. The standard RSI period is 14. However, traders often adjust this period. They aim to fine-tune the indicator's sensitivity to price changes. Larry Connors, a renowned trader, developed a trading system. It relies on a shorter RSI period. This system is called the RSI-2 trading system. It uses an RSI period of 2. This shorter period makes the RSI more reactive. It captures swift price movements. These movements are common in short-term trading. The RSI-2 system isn't solely based on the RSI. It incorporates a longer-term trend filter. This filter is the 200-day Simple Moving Average, or SMA. This combination helps traders identify opportunities. They can then trade in the direction of the prevailing trend. The RSI-2 trading system seeks to capitalize on short-term price extremes. It looks for potential reversals within a longer-term trend. A buy signal occurs when two conditions are met. First, the RSI-2 must drop below 10. This indicates extremely oversold conditions. It suggests a potential bounce back in price. Second, the price of the asset must be trading above its 200-day SMA. This confirms an overall uptrend. This combination of an oversold condition and a long-term uptrend presents a favorable buying opportunity. Traders aim to buy low and sell high. They look for these buy signals. The signals suggest a higher probability of an upward price move. Conversely, a sell signal in the RSI-2 trading system reflects the opposite scenario. It suggests an opportunity to sell an asset. The first condition for a sell signal is an RSI-2 reading above 90. This signifies extremely overbought conditions. It suggests a potential downturn in price. The second condition requires the asset's price to be trading below its 200-day SMA. This confirms an overall downtrend. The confluence of an overbought condition and a long-term downtrend presents a favorable selling opportunity. Traders can use these sell signals to manage their risk. They aim to avoid large losses by selling when the market shows weakness. The RSI-2 trading system, like all trading systems, isn't foolproof. Traders should use it with caution. While some reports suggest the system demonstrated success in certain market conditions, such as the bull market in mid-2023, relying solely on past performance is unwise. Traders must acknowledge the limitations. One significant limitation is the lack of specific risk management rules. The system doesn't define stop loss or take profit levels. These levels are crucial. They manage potential losses and secure profits. Traders using the RSI-2 system should conduct further research. They need to determine appropriate risk management techniques. These techniques should align with their risk tolerance and trading style. In conclusion, the RSI-2 trading system offers a potentially effective approach to trading. Traders can use it to identify overbought and oversold conditions. It's crucial to remember that no trading system guarantees profits. Traders must always conduct thorough research. They should understand the risks. They should implement robust risk management strategies. This will help them navigate the complexities of the financial markets.